Come on in, everybody. Come on in. Welcome to another Thursday night, Rolling Commerce, episode 6. Come on in. I hope everybody's having a good Thursday. We got some special guests in the building tonight, but before we get into that, let's do a quick little roll call, guys. Come on in. Let me know where you guys are checking in from as people start to pile into the room. Go ahead, get your check-in in early. Let me know where you guys are checking in from. Also, in one word, let me know how you guys are feeling tonight. Come on in. Let me see where you guys are checking in. Shout out to everybody that's watching on YouTube. Shout out to everybody that's watching on Facebook. Big Zoe, I see you in the building. Shout out to the moderators. Moderators, we are now no tolerance tonight, moderators. No tolerance. No second chances. Nothing. All right. So moderators, keep your eyes open as the room builds up. Doing zero tolerance tonight. All right. So shout out to all the moderators. Shout out to all the MGMs, the mentor gang. Shout out to everybody that's a part of the mentor gang. Come on in. Shout out to Big Herm. I see you. It's the walk. I see Cleveland. Let me know where you guys are checking in from. You guys on the road? You guys at truck stops? What's going on? Shout out to Corey Jackson. I see you. Shout out to Kirk. I see Kirk is in the building. Interstate Screw is in the building. Shout out to Interstate Screw. I see Detroit. I see Big Zoe, Raleigh, North Carolina. I see you. Shout out to South Carolina, Star Cargo LLC. Shout out to Fort Worth. What else? We got Louisiana in the building. Chi-Town is in the building. We drop bombs for Chirac, all right? Bombs for Chirac. Grace Logistics, another Chicago in the building. Chicago is in the building. I see everybody from Chicago, Maryland. Trust Logistics is in the building. We got New York in the building, Jordan in the building, Cali in the building. Come on in, everybody. Make sure you guys hit that like button. Let me pay some bills real quick, and then we're going to get on with the show. We're not going to wait. People can file in as YouTube sends out the notifications. So far, we got over pushing up towards 40 people. I need to see 40 likes, and as the room builds up, I need the likes to build with the room. All right. So welcome back to another episode of the Rolling Commerce Podcast. Are you a small business owner in need of capital to take your business to the next level? Look no further than Rock Financial, your trusted partner in business funding. I recently had the opportunity to speak with the team at Rock Financial, and we have two of them here tonight, Ryan and Tony, and I was blown away by their dedication to helping small businesses thrive. They understand the unique challenge that entrepreneurs face, and they've tailored their services to provide flexible financing solutions that work for you. With Rock Financial, you can access a wide range of funding options, including business loans, lines of credit, equipment financing, and even merchant cash advances. They work with businesses of all sizes and industries, so whether you're just starting out or looking to expand, Rock Financial has a solution for you. So whether you need capital to grow your business, purchase equipment, or simply manage cash flow, Rock Financial is here to support you every step of the way. Visit their website. I have pinned the link into the chat, so make sure you hit the link that's pinned to the top of the chat or in the description today to learn more. Make sure you guys hit those links so that I can follow your deal, guys. So if you don't use the link, I won't be able to follow your deal, and I won't be able to help you and look at the loan and let you guys know what I think. So make sure you use the links that I provide. It's pinned to the top of the chat or in the description. Once again, thanks to our sponsors, Rock Financial, for making this podcast possible. And to all my subscribers, listeners, remember your dreams and business aspirations are within reach with the right partner, Rock Financial. Your success is their business. All right. So now that we paid some bills, we are going to get right into it. Make sure you guys continue to hit that like button. Moderators, keep your eyes open. We're talking big business tonight. You guys have been bugging me for over a year. Mark, I need working capital. Mark. You guys that I talk about all the time and make fun of that are robbing from the sustainability of your business. You're running all week and you can't pay yourself because you don't have working capital. Tonight is the night. All right. So get your questions answered. Come learn about different products, business lines of credit, equipment financing, term loans, so on and so forth. So I want to introduce the guys from Rock Financial. We got Tony and we got Ryan. How are you guys doing tonight?
We're awesome, Mark. Thank you so much for having us on. I'm Tony. This is Ryan. We're super duper excited to be on with you in the podcast this evening. Thank you again so much for having us. Um, Honestly, your commercial summed it up perfectly. I don't even feel like I need to dive in too much, but just if I could go into as quickly as I possibly can who we are and what we do. It's
Mhm.
very simple. We help business owners gain access to funding when they probably can't go to their traditional bank and get it. If you can go to Chase or Wells Fargo and they have a product for you that will actually meet your needs, you should probably do that. And the real game starts when they say no. And that's where we kick in and where we specialize. We're a financing broker, so we do a little bit of everything. We don't necessarily align ourselves with any one product or service. And because of that, we can kind of stick and move, which is exactly what a small business needs. Especially one in the transportation industry where it's not necessarily just about you. It's about your customers. It's about the cost of doing business, whether that's fuel or paying employees or the cost of just some new equipment. There's a lot that goes into it. So the one thing I want to point out is transportation and trucking is our number one industry. So if anybody's going to be here to give you guys some insight into what it is, it's going to be Ryan and I this evening. So we're super excited to be here.
Great. Appreciate you. Ryan, did you have
Absolutely.
anything you want to say?
Yeah, thank you again, Mark, for having us on and giving us this opportunity. I think you said it best. This is going to be the podcast for us to be on. As Tony said, trucking and transportation is really our hottest industry and where we have found the most success helping business owners outside the bank when they can't qualify, whether it be for tax return, profitability, credit score, industry restrictions. Really, all those factors, whether you're going to name it on that board or not, we're going to help you, and we are going to pair you with an advisor that's going to be working with you one-on-one during the duration of every process here. So we really like to consult and be the number one and be that resource for you going forward.
Okay. So let's get straight into it. Why don't you start with, just talking about the products? A lot of the issue that I see in my mode and with my subscribers is working capital. Trucking is a very small profit margin business, and a lot of guys just do not have enough working capital, to keep their business afloat. So can you guys just start going through the products so that these guys can start taking notes to see possibly which product may work well for their situation?
Yeah, absolutely. And I think even prior to that, it makes sense to kind of touch on what is a small business versus like a startup versus somebody who's maybe been in business for a bit and they might not be so small. And you say small business and they might not feel like that's them either. They might feel a little bit larger than that. So just to kind of put some guardrails up for you guys, when we talk about small business in the alternative funding space outside of your traditional bank, what we mean is a business as a startup. They don't have a business checking account. They probably haven't even really started earning revenue just yet. That's a startup to us. I mean, if you were to go on Shark Tank and pitch your idea, you could be 10 years into making revenue and they'll call you a startup. That's not what we do here. We're on the true debt side of things. So what I mean by that is we're going to give you some form of loan or line that's going to be based on the performance of your business. So you have to have a business checking account. That's number one. Because that's where we're going to deposit funding. That's where we're going to need to pull our payments from. So that's really the number one guardrail for us, is having that business checking account. The second guardrail that I really want you guys to keep in mind, and we're talking working capital, so don't look at me too sideways here as I say this, but the second one is affordability, right? No lender or bank out there is going to give you money that you can't afford. They stopped doing that in 07 and 08 when we had the recession back then with stated mortgage income and stuff like that. So you really need to be able to prove that you can actually sustain the loan and sustain your business. Those are two things that you have to make sure that you can prove. And that's what we're here to do and help you do. We understand that not everybody is a financial savant or a CFO in their business. That's what we help you do. We help you pop the hood on this thing and really understand what is actually going on, so that what we actually end up doing, Mark, is we take a business owner and we don't even sell them a product. What we do is we take a look at what their opportunity or challenge is that they're facing, and then we use their business to back us into a product that will actually service that need that they have. So what we really do is we take an educational approach where we're going to look to learn about your business. It's not going to feel like your typical run of the mill underwriting process where we're just going to ask you to submit a bunch of documentation and tell you approved or decline. That's not the case. You're probably going to get almost feel like you're getting interrogated a little bit at first, because we want to know. We really want to engage with you and understand, where's this business coming from? What are you doing now? And where do you want to go? Because that's what we want to be a part of, is we want to really understand that what we're doing today is going to help that business for the long term. So what we really try to do is take that educational approach. We're going to do a really deep dive or discovery call, or intro call as we call it, and it's going to feel a little bit like an interview. And I challenge you guys to interview us as well. Like, if you're somebody that does reach out, ask your questions. What's the terms going to look like? What's my deal going to look like? Because as you give this information, that's the type of information we're going to give back to you anyway. So when you are able to ask your questions, we can ask ours. The two of us can really come up with a plan that's going to service the actual need in the business. Now, I've heard people tell me they need money for a truck in the past, right? And that's fine. You can need money for a truck. But why do we actually need money for a truck? Is it money for the truck because the truck is broken down? Is it money for the truck because, I am actually growing? I have some employees. I want to get a couple more trucks out on the road, right? So there's a story behind every reason that you're going to look to borrow money. That's what we want to hear. That's what we really want to understand, because that's where we're actually going to be able to explain your story to a lender. And then that's where underwriting happens, right? And that's where it starts to almost feel like a little bit like traditional lending, where somebody is going to look at this thing black and white. They're going to look at your credit score, the quality of your credit, right? So they want to know, hey, even if you have a high credit score, do you just have one credit card that's been open that you paid for 3 months? Or are you somebody that has, 5-10 years of history? You have a mortgage on your credit. They're going to look at the quality of your credit. They're going to look at the length of your business. They're going to look at the structure, right? There's box trucks, there's long haul, short haul. We got all different types of trucking and transportation. You got hot shot, all different types. I don't know who listens, and if you get anybody in like the medical transportation industry that listens to this podcast, but like even that's completely different than all the other ones that I talked about. Towing, right? That's a big one as well. Like, we work with all of these different businesses. And again, we've done it time and time again. It's our best at performing industry. And I think it's probably because, let's face it, banks don't love transportation. And especially right now. It's not just transportation. I want everybody out there to know this. It's not just transportation. If you're a restaurant owner, if you are in auto repair, if you are in any of these other industries that aren't being a doctor or a manufacturer, banks don't really love you right now. That's really it. That's all they want to see right now are doctors and manufacturers. And even that, it's tough to get money from. Banks don't really like lending to business owners. Why? It's super risky. They'd rather lend you your money for your house. So what you really got to keep in mind is, a bank, even though they might be able to service your need, are they actually doing that? And what I mean by that is, a bank may say to somebody in the transportation industry, yeah, we'll do your deal. We'll give you 25 grand. But what if you needed 250K? What does that do for you, right? Like, is that necessarily the best option? Or does it make sense to take that 25K and we can go get you some more money? I don't know the exact scenario, but what I'm saying is allow us to help you and be in your corner. The more information you give us, the better of a resource we can be back to you as a business owner. The leverage our knowledge of finance, of the process, of all these lenders and banks that are on our platform, and you give us the ability to give you information. That's all that we do. And if you don't hear anything else tonight, just understand that all we do is move information quickly. We'll take your information and put it into a package that a lender likes to see. We're going to give them the information that they need to make an efficient decision. And then we're going to take that information that we get back from them, and we're going to explain it to you so that you understand it in terms of rate, term, how much money you qualified for, any fees that are associated with those products. So we really take an approach where, hey, it's not just going to be about what it is that I qualified for, but how do I actually leverage it, and does it make sense for my business? Because let's face it, a dollar today is worth more than a dollar tomorrow, yes, unless you spend it foolishly, right? So what I mean by that is it's really going to come down to that use of funds. Like if you're somebody out there that you're thinking, hey, I'm going to take this money and I'm going to use it for something in my personal life, I would totally advise against that. I would tell you to put it into the business, allow it to make you money, because that's when this money is going to make the most sense. I always say dollars make sense. So let's work on that together. It really is a math thing if we really put pen to paper and understand, what are the margins, and if you can add another truck, what does that look like? Or if you can get your truck back up and running, what does that do for you, and how quickly we can move? So again, the best thing that I could tell you is we're going to really take an approach where we're going to try to understand exactly what your business needs and give that back to you in a way that you can make the best decision for your business. We're not going to make the decision for you. And you'd see that in the process, not to go too far into things, but like when somebody does apply with us and they get an approval from us, unlike somebody else who might say, hey, here's $50,000. This is what it looks like. Take it or leave it. That's not how it works for us. We send out a calculator that literally is a blended offer amongst all of the different offers you might have received from, it could be 3, 4, 5 different lenders on 3 different programs a piece. It could be a bunch of different offers. But what our technology does is it blends all of those offers together into one calculator experience where you can go in and say, oh, I'm approved from 25 grand to 125 grand. I'm approved from 18 months down to 6 months, or, I could take the 9-month term with 70,000, or I could take the 10-month term with 100,000. Like, it doesn't really matter. It allows you as the business owner to go in and really be in charge of what you're going to do with the money, and how you're going to utilize it. When you then say, hey, yeah, I'm going to take this money, well, then again, that's when, like Ryan was talking about, your finance advisor is going to kick back in. They're going to ring you and they're going to say, okay, we're ready to go. This is what I need to make sure that you get that done efficiently. And that's really what we're here for. We're here to make sure that if you're taking funding, it's done quickly, efficiently, and with the right lenders. You and I had a chance to speak for a couple minutes before this, and you were talking about doing a little bit of research on us and trying to find some dirt, and there wasn't much that you could find. Well, that's because we do business the right way. Our lenders will tell you the same thing. And that's a powerful tool as a business owner. We know our lenders, we know what they do and how they do it. You can leverage that information to go from product to product or lender to lender and really take advantage of the options that are available on the marketplace today, because it's 2023, man. You could get money anywhere. It just matters, what it is that you're going to get the money for, and is it the right money for you to take?
Great, man. That's a lot of information that you just kicked in to consume. But man, it's good. I hope everybody out there is taking notes. So, do you want to get into products, different product options, or Ryan? Did you have something that you wanted to add to that, or?
Listen, I think the biggest thing to understand is my biggest question everyone's going to be asking. Why do I need to be paired with a financing advisor? Why can't I just go online like these other companies and see that online, yes or no? And I think the biggest thing for these business owners to realize is that we are going to be working for your business. We're going to be finding the best option for your business. And then again, speaking to our online reviews, we never want to be in a situation where we're not aware what's going on with this business owner and we're not bringing them the best options that we have available in our marketplace. So really getting them on the phone with that business advisor, we're able to build the relationship with that client so that we're able to work with them for this financing. And then also in the future, when they ever have any other financing requests, they're going to have that advisor that they're always able to come back to, rely on for any questions, concerns, and then that refinancing point when they're eligible in the future as well.
Yeah, absolutely. You crush that. It's certainly true. When you talk about financing, it's all about the relationship. And we're smart enough to tell you to keep your relationship with your bank. If you recall, what I said first was, hey, if you can go get money at Chase, Wells Fargo, Bank of America, go take it. That was the first thing that I said on the podcast here, because I wholeheartedly mean that. You're going to hear that from every member of our team. We're going to make sure that like the money that you're leveraging is what's best available for your business. There's people out there that'll give you money, but they want to take equity. There's people out there that'll give you money, but they want to take a piece of something, or they want a promise. That's not us. What we're here to do is educate you on the options that are available. So like you mentioned, I think we should dive into the products a bit here and just kind of talk about what is reality, because at the end of the day, nobody wants to be fluffed. And I wouldn't do that on this podcast, not with this industry. And I hope you can appreciate that. But
I do.
what it really comes down to, guys, is, again, your ability to show that you can pay the loan back. So I'm going to contradict myself just a little bit for 1 second. And I'm going to talk about the startup for just 1 second. And what I mean by that is there is one way that if you don't have a business checking account, we can get you money for a business, and that's through equipment financing. So that's the first product that I'm going to highlight for a second here is equipment financing. The way equipment financing works is, again, can you afford the equipment, right? I said every deal is going to be based on affordability. I promise that's going to keep being a key that I say. But when it comes down to equipment financing, the real risk is going to be based on the actual piece of equipment, believe it or not. It's not necessarily the borrower. So yeah, they're going to take a peek at your credit. They're going to take a peek at some financing things and make sure you got some stuff in line and you got the ability to pay the loan back. But even if you're an employee today and want to be an employer tomorrow, you can go out and purchase a piece of equipment for a startup business as long as you've filed paperwork for that business. So if you've built out an entity or of some form and you have an invoice for the piece of equipment, we can use that to go get you funding. But here's the caveat. Here's the asterisk that I want you to put here is it's going to take a hell of a down payment. It's like going to buy a vehicle with bad credit. And they're not just going to extend the term for you. That's not how it works. They're going to look for like 30 to 50% down payment if you are a true startup. They might not require all of it to be paid. You might see 20 to 30% down, but they're definitely going to want to see that you're liquid at least up to 50% of that piece of equipment. So just keep that in mind. If you are somebody that is true startup, you might be working under somebody else's authority right now thinking, hey, I can go pivot into doing my own thing. I'm totally with you, and I'm your biggest cheerleader. Trust me, you're just another small business for us to help out in the long run, right? But no, I want you to hear me loud and clear and really understand what the reality of the situation is. There's a lot of people that like to lend for trucks, trailers, all different types of trucks, so box trucks, all sorts of this type of equipment. But what they want to see is, again, that you can afford it. And a big piece of that affordability, if you don't have the business to show it, is going to be the liquidity on that down payment side. Now, let's say you do have a business and you are running a business and you're ready to get going. Maybe you want to ramp up, buy another truck, or, kind of keep things going. Well, that's where you're going to fall between that 15 to 25 and even 30% down range. They're going to want to see that you have the liquid within, the liquid cash to be able to do that, even if you are on the lower end of that. I see somebody said, what about a cargo van? Same thing. That's going to fit right into the same spectrum here. So shout out to Kelvin for that one. Thank you. I missed that. I apologize. But no, once you get going in business and you're looking to leverage the business, what becomes unique about that is you can get equipment two ways. Not just an equipment finance piece, but you could also just leverage the business for cash now. So we started to talk about things like term loans, lines of credit, and cash advances. Those are going to be products that will actually just put cash in your hand that you can do essentially whatever you'd like within the business with. So as you're somebody that's leveraging cash within the business, it's important to keep in mind what you're using that money for, because if it is equipment, you might find that you'll get better terms on an equipment finance than the cash side of things, simply because of the performance of your business or the size of your business. So if you're somebody making like 5 or 10 grand a month or 15 grand a month, you might not qualify for enough cash to go out and buy a piece of equipment. You might need to be making 30, 40, 50 grand a month to really get enough cash, just in cash out of your business, to go buy that piece of equipment. So if you are somebody that's 10, 15, $20,000 a month, I would say you should look at some type of equipment financing or equipment lease to get you that piece of equipment. And here's a quick insight for you. And, don't run the ad during this one. This one's a freebie.
Okay.
If you are applying, you should, if you are looking for a piece of equipment, you should always ask the place that you're going to buy the piece of equipment from. Now, I say that with an asterisk too. If you're somebody that has like a sub 600 credit score, I probably wouldn't even go that route, because they're going to auto decline you. They're going to work with traditional banks, and anybody with under a 600 credit is not what a bank wants to see right now. So if you are somebody that has like 650, 700 credit though, and you're going to go apply for you're going to go buy a new piece of equipment, I might ask that equipment vendor or that person that's selling that truck or trailer or whatever it is, do you guys offer in-house funding? Because they're going to give you the best terms on their piece of equipment. They're the ones that are going to finance it, right? If that doesn't work, that's where we come in. Right. We even have relationships with a lot of those vendors and resellers of equipment who will send us somebody who doesn't meet their in-house qualifications. So even if you are going to go through that route, you might end up with us anyway, simply because of how we're positioned within the marketplace. But that's what I hope you take away from tonight, is the difference between traditional lending and alternative lending, and when each of these things kind of kick in. Just to dive back into equipment financing, what's really, really great about it is it's typically longer term than some of these cash products are. So because of that, your payment's going to be much lower, right? If you talk about a 3-year term loan versus a 6-year equipment finance deal, right, you're talking about a term that's twice as long. You can almost say you're going to look at about half the payment. Now, you might pay a little bit more for the money because it is a little bit longer of a term, and you'll see that on exactly where the payment is. But that's where I really love to talk to business owners and have conversations about their specific scenario, because at the end of the day, it's really going to come down to just that. It's going to be, hey, what can I afford? What makes the most sense? And it really is a situation where you can use this money whenever you need it. And what I mean by that is, I once heard somebody say that we're in this industry, we're like investors that are here when you need us and gone when you don't. Because if you're somebody that payment doesn't really matter. I keep a lot of cash in my business. I got a decent amount of cash on hand. What I'm looking for is actually the cheapest rate. Well, then you would want the shortest term, because even though the payment might be a little higher, you're going to pay the least amount for that money because you're not keeping it out as long. Now, if you're somebody that's like, hey, cash is a little bit of an issue, I need to keep as much cash on hand as possible, well, then you want to stretch that term out as long as possible, because that's going to give you the cheapest payment. You may pay a little bit more for that money because you're going to pay a premium for having it over the longer term. I mean, it works the same way with a mortgage. You get a cheaper rate on 15 years than you do on a 30-year mortgage. It's the same thing. You're just holding the money longer, so they want to see a higher rate of return. That's not us. That's the lenders, right? I'm just letting you know how it works. So when you're somebody that's in this industry, the first line that you want to draw is, am I using this money for equipment? If the answer is no, now we'll talk about the other side of things, right? And now you got, employees you're paying, repairs, let's face it, just tires are expensive these days, right? If you had access to a line of credit, you might be able to pull that on the line of credit and get through a couple of weeks here, wait for some of these payments to come in and be able to pay that thing back. So when you're somebody that is looking for cash, the best thing to understand is how your business operates, because just like on the equipment finance side, there's a lot of options on the cash side, especially for this industry. You guys have what lenders love, and that's called receivables. What that is when you perform business and that business is done, at the end of the day, you now have an asset in the business. That's what that is. Receivables are classified as an asset. Lenders love assets. If they can tie up your assets, they will give you money. Now, you can utilize that money for whatever you'd like, right? So there's a product called factoring and accounts receivable financing. Some of you might even be utilizing factoring already. This is a really great way to get away from those 30, 60, 90-day terms and get cash today for that receivable. So what happens with this style of product is somebody actually purchases that receivable from you. They're buying the invoice. What they do is they buy it on a little bit of a discounted rate, and then when that receivable is paid, they're going to give you a little bit more, but they're going to take a little bit off the top. And the way that works is a lot of times what happens is you can even factor this in, no pun intended, you can factor this into your own pricing. Right? If you know, hey, this is the style of relationship I'm going to have, and I'm at a 85% discount rate, which means, hey, for every $100 I charge, I'm going to get 85 in my hands. You can just up your price a little bit, right? And if you up your price a little bit, yeah, it may not be the best thing for some of your customers, but it's 2023. Everybody's upping their prices. But no, what I'm telling you is this would allow you to offset that cost. Right. So now you're not paying for it. Your customer is. It's kind of like credit card processing is to every other industry, right? Where they're starting to pass some of that along to the customers. I don't know if you've been in a restaurant lately where they hit you with the cash discount program, where it's like, hey, we'll give you 4% off if you don't use your debit card. What that is they're passing that fee off to you as the consumer. You can technically do the same thing in your business because of your business model, because you have that receivable in your business. That restaurant owner, they don't have any receivables. When you go buy a pizza, you got to give them cash on demand. So I see somebody talk about Mark's box truck shirt. I can't even get away from that thing because that thing is sick. I definitely need one of them. I love that thing, black and red too. So you know I like it.
Appreciate it.
But no, the factoring is a really great product if you really understand how your business works and it's something you can make work. Now, if that's not the case, well then let's look at some other form of cash, right? There's term loans and lines of credit, which a term loan is a fixed amount that you get access to, and then you pay back on that fixed amount. What a line of credit is it's that fixed amount, but you can draw on it and pay back as needed. And as you pay back, that amount's going to become available to you again, right? So it works just like a credit card. And what's unique about those products is sometimes they can even be used hand in hand, right? So if you're like, hey, I'm actually going to buy a business, right? I know somebody that's a little bit smaller of an operation, or we're going to join operations and I'm going to buy them out. You know, they got a couple of routes, maybe FedEx or something like that, right? You know, you're going to buy that route. Well, here you can use that term loan to have that initial cash injection to actually be able to buy that, and then have a line of credit for some, like we were talking about, additional working capital where you can leverage that as needed as you start to grow that business and start to operate that thing. So the cash thing is super unique where you'll get access to a ton of different options. And you also have cash advance. And where cash advance fits is term loans and lines of credit are a little bit more bank-like. What I mean by that is you're probably going to need about a 650 credit score or above. You're probably going to need almost a year plus in business, maybe even 2 years, depending on what type of transportation you're in. But what you should really, really understand is that doesn't mean that cash isn't available to you. And some of you might have heard the term cash advance before and heard some of the horror stories that go on around that product. What I can tell you is we would never sell you money that didn't make sense, number one. And number two, the cash advance is one of the best products on our platform. Why? Because it's the most flexible. So if you're a business owner, you know the power of flexibility. You also know how powerful you could be with an extra 10, 50, or 100 grand in your pocket. So that's what my question is to you is, does that then make sense, right? And with a cash advance, it's very easy to tell. A cash advance operates on a completely different style of interest rate. So, you talk about a term loan, a line of credit, some of the different products that are out there, even equipment financing, they're all on a traditional APR compounding interest rate. So the number might look small, but every time that thing compounds, they're restarting the clock and they're recharging you interest on whatever's there, right? So even if you paid down a bunch of money, you're really only paying interest, especially at first. They always front load the interest on those types of products. So a lot of times you end up paying interest for quite a bit, and then your principal starts to kick in on the back end of those things. So it's, again, super important that you really understand what's best for you. I've had people come in and tell me, hey, I need a $2 million line of credit, and then end up taking a $50,000 cash advance because that's the best option for their business. It's not necessarily about what you think you want today. It's about what's realistically available and what can you realistically put to use. So I just want to tell a real quick story about a gentleman out in, he was right on the California border, Northern California border. He was between California, Oregon, and Washington. He had a couple different states that he was operating out of. And basically he had a towing company. He had 3 different locations. He had something like 36 trucks or something like that. Like he had a real operation going on, and he was crushing it. But he called us flipping out. This was probably like I can't remember if it was the beginning of last summer. It was whenever gas prices first skyrocketed. I think it was right at the beginning of last summer.
Spring, end of spring going into the summer.
Exactly. And he hits us up, and he is like, and he's on the West Coast. I just happen to be doing something in the office decently late night. We're on the East Coast, in case anybody's wondering. It's already almost 9 p.m. here, right? But it was probably right around this time that his application came in, and one of our reps was still in the office. And I said, hey, we got this business here that just applied with us. You want to give him a shout? He's on the West Coast. And he was like, yeah, absolutely. Actually, I'm pretty sure it was after 10 our time. So he called him and he's like, listen, I'm sorry it's late. He's like, I just got done working. He's one of those guys that's working in and on the business. And he's like, listen, I'm not going to meet payroll tomorrow. And we were like, all right, well, let's take a deep breath, walk me through some things. And long story short, just to cut right to the chase, he ended up getting $125,000 the very next day, wired to his bank account, made payroll, kept his business going. But he literally was at the point where he was like, listen, I'm to the point where I spent all my money in terms of recently trying to grow my business, and I did not think that this was going to happen with gas prices. And I have spent all cash that I had on hand to run my business the last 3 weeks. And I don't have any left. I'm not going to meet payroll tomorrow. I'm going to have 50 pissed off employees, and I'm not going to have a business come Monday if we can't make this happen. Well, thankfully, he was on the West Coast. Thankfully, we are who we are. We were able to get his information that evening. We applied with West Coast lenders because that gives us an extra 3 hours of business the next day where we can leverage the fact that we have relationships on the West Coast. We got him a deal where he was able to get that capital. It paid him that day. He was able to pay his employees. They were all still there that following Monday. He's still a customer to this day. He's borrowed 3 or 4 other times, sometimes less, sometimes more. But I can tell you that he's probably not going to go anywhere else. Why? Because he tried 4 other places before coming to us. Now, I'm not saying to not go try elsewhere. In fact, what did I tell you first? Go to the bank. But I also understand what the reality of the situation is and what you can be up against and where the best kept secret when it comes to commercial financing. So let's get in your corner and see what we might be able to help you with. That's really the probably the gist of the products in terms of this specific industry. I mean, we offer commercial real estate funding if you were ever looking to purchase like a warehouse or something like that in your business. We offer SBA funding. If you're familiar with that, you can use SBA funding for a lot of different things, from buying a business to working capital to paying off debt. These are all things that you can utilize a lot of the products on our platform for, but as well as SBA funding. And then I don't think there's really anything else, right? No other
No, I
products.
mean, not on the product side, but just to emphasize again, I mean, like you said, when coming in for working capital, line of credit, being a marketplace, you can walk out the door paired with both of those products. That's again going to be the value of getting on the phone with that business financing advisor so we can have an understanding of what's going to work in your business and how we could help you really uncover for the projects. We've been on the phone, say, countless times. We're getting somebody MCA, and then we're talking, hey, we have this line of credit we could pair with it. Is there anything else, you were looking to get done in your business that you're holding off on right now? And then time after time and time again, they're always saying, hey, I've had this project. I just haven't had the capital to jump on it. Let's do it. So we're pairing two options together. And then, it's not something that a direct lender is going to be able to provide, that yes or no option online when you get that original decline too.
Yeah, absolutely.
Yeah.
And when you are somebody that's gonna go through like a Nerd Wallet or a Lending Tree, or who are some of these like businessloans.com,
Or
which
Lendio.
yeah, or some of these large companies that might provide like a cool digital experience. And I think ours is pretty cool too. We've done a hell of a job of updating it.
Try
But
to mix of both.
but we understand what the power of people is, and that's understanding a business. We operate with empathy and respect, and we really put ourselves in the business owner's shoes. I see James's question about, does your company have programs that help or prep for an existing business that might not be fully ready for funding? This is an awesome question. I even see somebody else shouted him out on it, because it's probably where a lot of people are, right? The number one thing that I would say is you're already doing something right just by listening to this podcast. You following Mark and making sure that you like and subscribe to this channel, that's going to lead you down a path to success, right? Timing is everything with funding. And if timing just isn't right now, it could be 30 days, 60 days, 90 days, or 6 months, or a year down the line when timing is right. You want to make sure you've dotted your I's and crossed your T's, right? And that's what things like this is going to allow you to do. It's going to allow you to prepare yourself for funding. You might have heard me talk a little bit about credit here, right? And what you can do with your credit. If you are somebody that's sub 600, sub 550, you might want to think about a little bit of credit repair, or possibly like a secured credit card at your local bank, where you can give a little bit of money up front and they guarantee that credit card for you. That will allow you, to develop a payment history and increase your credit score actually pretty rapidly. But that's one aspect of it, right? That's just your credit. The second part is going to be your business. Are there things in your business that you can do a little bit better? Are there operations that you can streamline? Are there things that you can add to the fold, or services you can offer, right? I don't know exactly what everybody is doing that's listening to this podcast, so I don't want to go too far down any one rabbit hole, but I'm sure you guys are seeing opportunity day in and day out where you could potentially make an extra few $100s here, a few $1,000s there. That's going to add up. Even if it's simply putting somebody's ad on the side of your truck, if that's something that you're open to, right?
Mhm.
Guess what? People will pay crazy money to advertise, especially you find the right people with the right product. You could be one of these people that's just driving around with one of those automatic digital, billboards on the back of their truck, right? Like, there's a lot of different opportunities there. It really is going to come down to what's best for you in your business. I do have one secret though. And this is one that I don't know why they don't get the I'll use today's term, the clout that they deserve. But let me shout out really quick the SBDC. That's the Small Business Development Centers. If you're not familiar with those, they are a free resource to small businesses. The real value here is their whole job is to exist for you to grow your business. That's what they're there to do. They want to help you add employees, add revenue, all through helping assist your business. So as you are somebody who is using different consulting or different coaching, one of the best ones out there is, and one of the best kept secrets, is the Small Business Development Centers. They're usually located at a university or college local to you. I know there's hundreds of them across the country. I don't know the exact number, but I know there's over 50 in New York. I know there's a lot more in California and Texas and Florida. Depending on where you are, you might have a little bit of a drive or not so much, but a lot of these guys are doing business virtually now. So keep that in mind, especially as you're going. You might be able to leverage that into something that's really great for you by utilizing a free resource within your business.
I'm here. I'm just, my camera's frozen, but I'm here, guys.
Okay, awesome. All good. And then the last thing that I just want to talk about is being somebody who's looking to prepare yourself for funding. Do just that, right? Understand where it is you want to apply that funding, because that's really what's going to be the most important part of getting you capital or funding in your business, is going to be, what are you using the money for? As you establish that, we'll be able to give you what the qualifications for that are, or what documents you might need to prepare in order to get something like that. So as you start to have this plan, I mean, shoot, leverage us. You can even click that link in the comments and apply and utilize us for simply information. And say, hey, what is available to me right now? Even if it is something that, hey, you might only get 5 or 10 grand to start. We just had somebody apply. Well, not just apply, but they just renewed with us for over $1 million. And the first loan that they took with us was 1.5 years ago, and it was $3,500. So, we can scale just as quickly as you can if you're somebody that has the ability to do that, and opportunity to take advantage of.
Okay. I got a question while I'm sitting here fidgeting with this camera.
You're good.
In trucking, what do most people that come to you guys for trucking, which option do they go with?
That's a trick question. You actually asked it in a unique way. Everybody always asks, what's the most popular product that people ask for? That's an easy one. That's a line of credit. Everybody, for some reason, likes the term line of credit or credit line. That's the hot button item. It's always the most requested. As far as what's most what's most then funded, it's pretty even amongst like term loan, line of credit, and cash advance. I would say that those are kind of like the big three, with equipment financing being the little brother and kind of the runner up there. And then factoring / AR really rounding things out. If I had to give you percentages, I would say the first three probably make up 60 to 70%. The factoring and AR might be like 5 to 10%, and anywhere between 10 and 15% might end up being equipment financing.
Okay. What for the can you can hear me, right?
Yep, we got you.
All right. For the equipment financing, because this is where a lot of people in this industry have an issue with financing a truck, especially coming in. I know the people that are coming in, this isn't going to apply to them because they haven't started yet. But for people that have been in the space, that have been renting trucks, when they go to Penske or when they go to Ryder, they have a hard time getting the truck financed. I know you guys do equipment financing and you spoke on it. Can you speak more to the actual an average of the terms? I don't know if you have data on Penske or Ryder as far as the interest rates and things of that nature, but can you kind of give us like a walkthrough of a person? Let's say if I came to you guys and I wanted you guys to finance me, let's say a $50,000 Freightliner, a 2017 $50,000 Freightliner. My personal credit score is, let's say, a 700, right? Because I'm going to have to PG it, right? I've been in business, let's say 6 months. What would something like that look like?
That's actually like a great product for us to take a look at. Number one, like I said, you're definitely going to need the liquidity for a possible down payment, especially with under a year in business. I would say you're probably looking at anywhere between like 15 and 30% down. So if it's, just doing some quick math here, if we were talking about that same $50,000 truck, we're talking like 7,500 to 12,500 that you would be putting down. Right. So you got to have a little bit of cash on hand to be able to put down, and it can't make you broke. Right. Like we can't be talking about your last dollars. So you got to have the cash to put down. That's number one. And then the terms are really going to be based on kind of how you qualify and what you kind of pick. Realistically, the way most of our equipment financing works on like the truck and trailer side of things is your typical terms are anywhere between 36 and 60 months. So you'll get like 36-month, 48-month, and 60-month option usually. And basically the way that works is, like I said, the longer you keep it, the more money it's probably going to cost you. And our interest rates usually work like a credit card. So, somewhere between like 8 and 18% on equipment financing, could jump up into the, high teens, low 20s, depending on exactly where your credit is and, the quality of borrower that you are, right? It's not just necessarily about the score. Sometimes it's about the quality of the credit itself. But the biggest piece is actually going to be that piece of equipment. That truck's got to have less than usually a million or 500,000 miles on it. Definitely got to be newer than 10 years old. So there are a couple of boxes that we need to check when it comes to a titled vehicle. But the best thing that you could do is have one in mind, because if you got a quote or invoice for that piece of equipment, we can let you know very quickly whether you're going to qualify or not. So as long as you have something in mind, we can easily tell you, hey, this is a good option for you, or hey, there's really no option here.
Okay. All right. So, any guys got any questions in the chat? Now is your time. I know I saw a bunch earlier, so I'm going to take questions for you guys in the chat while I'm fooling with this camera. And if you're MGM, obviously you guys get preference if you're part of the MGM. So I appreciate you guys, but now it's the time to go ahead and ask your questions. Unless you guys got anything else to say, Ryan and Tony, we can start the Q&A.
I think the room's starting to get that Tony's got plenty to say.
Okay.
But no, I do see a couple of comments about interest rate in there. I don't know how well versed anybody is on finance or kind of where we're at, with financing charges. But the interest rate has more than doubled, according to the Fed, over the past couple of years. Right now, the Fed's base rate is about 7.75%. The best product that is offered outside of a bank is the SBA. Why? Because that's combining the bank with the government. The SBA is a government-backed product. So what they do is they guarantee at least a half of that loan. So banks will actually offer it. And that product starts at 2.75% above prime. So even the SBA, which is the best product that you can get access to outside of a bank, starts at right now about 10.5 or 11%. And that's where it starts. Some of those products are 6% above prime. Some are 3.5 above prime. We do actually offer, our term loan starts at 6.99% APR. It's backed by Goldman Sachs, which is the largest investment bank in the world. But that's where it starts, right? If you think that you're going to apply for that and be a 6-month-old business and going to go get 6.99%, that's not the case. Again, like I said, the bulk of the rates on, especially on equipment, are going to be like between 8 and 18%, high teens rolling into the 20s. It acts like a credit card. And the best piece of information that I could give you, and I always use this example, is if you've ever bought a Starbucks coffee, you're paying a lot more than 30%. The average cup of coffee costs between 12 and 15%, 12 and 15 cents to make, and Starbucks charges $6. So, their markup's a little bit higher than ours, but money makes people act funny. So they hear rates that sound this astronomical number, but they forget how much money you actually make in business. If the dollars don't make sense, believe me, we're going to tell you not to go with it. If it does, though, at least we'll be able to get that. We'll be able to get you that option and get you the cash. A lot of people out there might boast a 0% interest credit card, but go try to get that credit card and tell me how long it takes for them to fund that thing. And then when they try to stack you at 5 or 6 of them, let me know what happens with your credit score. So, there's a lot of people out there that say a lot of things. We got 15 plus years in the business, 5+ stars, no matter where you look about us. That's because we give people real information. Sometimes people don't like to hear the reality of things, but the reality of things, like I said, is money's expensive right now, no matter where you apply. You don't gotta talk to me to find that out. Go ask a banker or anybody that's buying and selling money. They'll tell you the same thing.
Mhm. Kelvin has a question. What about older cargo vans, especially if the credit is below 600? Should I still apply for the funding? My business just started. I appreciate the time. I think I did see Kelvin in the portal. I think he applied last week. So you guys
Okay.
want to tackle that?
Yeah, absolutely.
Question?
So our product, the way that it works is, if you are somebody that just started out, we typically look for at least $5,000 per month going into a business checking account. Now, when you apply with us, if you say that you make less than that, or that you just started to your business, that's why I go to Duncan. I love it. You just started your business. We're not going to be able to help you right away. So you'll see that you'll get some automated messaging from us that will basically say, "Hey, was the information you filled out accurate? If so, we probably aren't going to be able to help you at this time unless it's specifically for a piece of equipment." In which that we'll start to talk about what it takes to get that piece of equipment. But for Kelvin, just to speak to your question specifically, it depends on how old that cargo van is, and exactly what when you did start that business. If you are somebody that started in the last like 90 days, it might be a little bit tough. It really is based on your exact scenario. I would probably like to learn a little bit more before I really go too far. But I can tell you, like I mentioned, if you are somebody that has a little bit of cash in your pocket, and money to put down, we should be able to help you out. Even if you are brand new, you just got to be able to put down like 30 to 50%, like I was saying earlier.
All right. Big Zoe has a question. This is the guy I was telling you guys about. I told you guys he would be here. So I applied a few times when I'm going to get it. When am I going to get an email? I'm trying to get a business line of credit. My credit score is 679. I make over 10K a month in revenue. He makes a lot of money, man. He makes a lot of money. He's a good student of mine, and he's very, very profitable. So he wants to do business with you guys.
I love it, man. It sounds like you're super duper successful. To me, I don't know exactly how the form was filled out. I'm definitely going to check into this once we hop off here, and just look at your portal, Mark, because if that deal is in there, that shouldn't be the case. The only time it would sit around is every Monday, Tuesday, and Friday are the deals that get kind of mass updated in terms of ones that don't meet our minimum qualifications. But if he's making over $5,000, which is 10K a month, and making over 10K a month, he should have never even been in that pool of data. Like his deal should have been out and working with a finance advisor. So Ryan and I will make sure to check in on Big Zoe after this one. That's for sure. And you and I, Mark, will stay in touch about that one in particular. I apologize that you applied a few times and didn't get any communication from us. That's usually not the case.
Okay. Does years in business weigh high or low, say if you on 5 years strong?
Axel, great question. Absolutely, years in business matters. Even a year in business matters, right? I don't know if you've heard of any of these statistics that say how many X amount of businesses fail in their first 5 years. If you are 5 years strong in business, first of all, kudos to you, because that is no short time, especially with what we've gone through in just the past few short years here. Shout out to you for making it through and really pushing along and continuing to truck on. No pun intended, but no, absolutely. Time in business is one of the biggest factors, or risk factors, as they call it. Your industry, your time in business, your credit score it's more going to affect things like your rate and your term than actually getting approved or declined. Things like your affordability, your industry, your time in business, those are things that will actually approve or decline your deal. And then just one layer deeper than this that we didn't really touch on too much is we can actually help when banks don't help at all. And what I mean by that is Ryan touched on this a little bit earlier. We can help if somebody has like tax liens in their business and they're looking to pay those tax liens off, right? They can't go get funding or go purchase a truck because they got these liens that are showing up that they can't pay off. We can actually get them funding based on their business despite those liens being in place. If you're somebody that maybe you even got a criminal record, right? Something that happened way in the past that as you've applied for some traditional funding that's popped up. We can help you with those options as well. Our system is designed to show you what's available outside of the bank. So if you're somebody that has gone and applied traditionally and you can't qualify, we would certainly love to help.
Okay, let's see. Here's a good question from James. With 5K biz income from multiple companies or gig apps work? If so, how many months in business? Then that's a good question because a lot of people run gig apps now, and there's a lot of gig apps for trucking. So how would that work?
Number one, what I would say is go get yourself a business checking account that all this money funnels into. That would be my biggest piece of advice, right? Even if it's something that you're transferring the money once a month from the app into your checking account or once a week into your checking account, whatever works for you. In the credit card processing world, they call it batching out. And that's essentially what you would be doing. You would be batching out from one gig and putting it into your business checking account. That's just not just for me. That's for pretty much any lender. They're going to want to see that. What I can tell you is some of these apps now are even starting to offer funding, right? Not to go into like the e-commerce world, but if you sell on Shopify or Amazon, they offer funding to you. DoorDash, if you are a restaurant that sells through DoorDash, they will give you money based on how much money you're doing through DoorDash. Some of these gig apps are getting into this because they're able to tell how much money you're making through the app, and then they'll offer you some funding through it. So pay attention for that as well, because I know that's coming, even if it's not there right now, because I see it in other industries and other verticals. But the number one thing that I would tell you is we're going to need to see that within a business checking account. So if you don't have one of those and you're not funneling the money through there, that's going to be the first step for you. And if that is the case, if you've done that, we only need 3 months in business. So as long as you've got 3 months of business checking account statements, we can take a look at that for you.
All right, Mr. Marcus Smith. What if you're a startup and you funded your business, then use the money to apply for Net 30 and other things, but we are in need of more funding?
So
okay.
My biggest question for Marcus is are you actually making revenue yet? Because I know there's some Net 30 accounts, even some business credit cards you can get access to that you don't need to be generating revenue just yet. For us, we would actually need you to be generating the revenue unless it's specific to that equipment funding, right? So if you were looking for like a piece of equipment, I could help you out and go get you some equipment financing. If you have no revenue on that side, but if you are starting to generate some revenue, then yeah, it goes back to that 3 months of business checking account statements, and we can help you out.
Hey, Terrell Elliott, you said how to what, how to which question, or how to whatever response. Can you expound on the how, Terrell? Where did I see something? Paul said 90% of the people in this live are startups, years in business. So Paul is right. That you guys probably know there was an influx of people that came into trucking during the pandemic because influencers were selling them on this dream of becoming a millionaire if you go get a box truck or whatever. So there's an influx of right. You gotta buy that. Right, you gotta buy that course first. So there's a lot of people in the space that are new. But these guys, for the most part, these guys have been in maybe a year and a half, 2 years. What you're saying is you only need to be in business for 3 months, right? You need to see 90 days worth of statements, right? But they have to be from a business checking account, right? Am I right on that or no?
Correct. Yeah, exactly.
Correct.
Okay. So Paul, 93 months, business statements, and then because you want to see that because the future receivables are going to act as collateral in most
Correct.
cases, right? Right.
Correct.
So
Even your like even on like a line of credit or a cash advance, they're technically even purchasing future cash receivables. Like
okay.
you read into some of these contracts, and that's really the only difference, right? Some people are talking about credit score, high interest rates, money down. The only difference between any of these products and anything that you're going to qualify for is simply the verbiage of a contract. That's
Mm-hmm.
it. There's still going to be somebody that's going to underwrite this deal. They're going to be looking at the performance of your business and the affordability of you being able to pay back that loan. And that's how the process is going to work. So, when you're applying for funding, it doesn't matter whether it's with us or somebody else, it's going to go that route. So what you're going to do with the funding and how to utilize it is all going to be outlined within the contract of receiving that funding. So when you are applying, the best thing that you can keep in mind is what might be available in your particular scenario. I see Edgar mention that he also, like Big Zoe, applied but hadn't heard back. The one thing that I'll say, guys, and I'm not trying to, I'm definitely going to wear the black eye here. Like, if we're not on this, believe me, X Ryan, the team will hear about it. But the one thing that I could say is that form is finicky. If you scrolled up and maybe your time in business went to 0 and you didn't realize it, or this or that, it's all based on that form and it's all automated. So if you inputted your information in the system correctly, it automatically spits back out what you should get. Not to mention, every single person that puts their information in should at least receive a text message. So if you guys didn't at least receive a text message from us, it could have been like a digit was off or something like that. The formatting, sometimes technology is great till it isn't. But as far as some of these newer businesses, like you were just talking about, Mark, that are applying for funding, the best thing that they can know is every day that they're in business, more and more options are becoming available. Let me just give you the straight 100% facts right now. If you're anywhere between 3 and 12 months in business, you are going to have a very small number of options available to you. Once you hit 12 months in business, it's going to become decently more options, but not a lot. When you hit 2 years in business, now you got a lot of options available to you. When you hit, like Axel was talking about, that 5-year number, every option's available to you. So that time in business, it compounds quickly for you. It might feel like, hey, it's taking forever to get to 3, 6, 9, 12, 18, 24 months in business. But as you do that, I promise you, you don't have to go through me. You could go through somebody else. It does not matter. You are in a 5,000 times better position in terms of the way that underwriters are going to view your business if you're somebody that has 5 years in business versus somebody that has 5 months in business. And that's just the way that underwriters view businesses. The one thing I want everybody to keep in mind is business is the riskiest part of a bank's portfolio. So anytime they lend money, it's going to be at a high cost. Even traditional banks lend money to business owners between 10 and 20%. You might get in the single digits if you buy a piece of real estate, because banks love real estate. But outside of that, you're gonna pay 10 to 20%. That's the bare bones minimum that anybody charges these days. Outside of that, if you're able to if you're not able to get funding at the bank and there is funding available, well, now it's again about, do the dollars make sense? And hey, can I apply this money to my business and make money? And let me just give you guys a real quick scenario here. You're a business owner. You've been doing business all year, right? You're in transportation, so you want to buy another truck. That truck's going to cost you, let's call it $100,000 just for nice round numbers, right? And today you have $250,000 in your bank, right? Today you do. So you go out and you buy that piece of equipment. Well, you now have $150,000. But according to Uncle Sam, you still got $250K because that's what you made. Now, when you borrow money for your piece of equipment, you unlock what's called Section 179 of the tax code. Okay. And section 179 allows you to write off the value of the piece of equipment in the first year that you buy it. So what that means is if you took a loan for that, you still keep your 250,000, and according to Uncle Sam, you only got 150. But here's the kicker. Because you borrowed money, you're also going to be able to write off the interest cost. So even if it did cost you 30% of 100,000, so it's going to cost you another $30,000, Uncle Sam now thinks you made 120,000 and you still got your 250K in the bank, and now you're making payments on the loan, right? So if you are somebody that has the ability to pay a loan back and leverage the capital that can be lent to you, do it. If you're somebody that has cash and you're operating your business and it doesn't make sense to take funding right now, wait. It might make more sense in 90 days or 6 months when you have a better opportunity, whether you're buying another route like I was talking about before, or purchasing that piece of equipment, or growing your business, or maybe there's a challenge like I was telling that story earlier of our buddy that was towing out on the West Coast, right? Maybe you're somebody that's just going to need to meet payroll. Guess what? It wouldn't have mattered if it was 500% he would have borrowed it. It really wouldn't have. He would have borrowed it. And I'm not saying that that's the right thing to do, but he would have borrowed it. He had very few options, right? So that's the biggest thing to keep in mind is most of the people that apply with us, to be frank, Mark, are people that are, for lack of a better term, stuck between a rock and a hard place. And, they don't really know which way is up. It's somebody that's like, hey, I know I need funding. I just don't know where I can get it. That's who our core borrower is, to be honest. It's the person who probably even was declined at the bank recently. And that's where our core borrower exists. It's, we're not necessarily for everybody, that's for sure. But we're certainly going to be here to give you exactly what it is that you're qualifying for and what the whole market has to say about that. And if it's, hey, I applied, I looked at my options, they don't make sense, good. Take a break. We'll look at this thing again when it does make sense for you. And the best piece of that, and just to throw this one last thing out there, is when you do apply with us, it doesn't affect your credit score. We do a soft pull of your credit, so it's not going to lower your credit score. It's not going to show up on your credit. So you can, like I said before, pop the hood on this thing, really understand what it is that you're qualifying for, and then determine if it makes sense to move forward.
All right, let's see here. Okay, so Terrell's question: how much revenue are you expected to make monthly in order to get approved for funding? I think you might have came in late. They said $5,000, right, guys? It's $5,000, right?
Yes, sir.
Yep.
Oh, $5,000.
Per month.
Go ahead. I'm sorry.
No, I just said per month. That's all.
Per month. What if you were off past 3 months? Do you need most current 3 months revenue, or will past couple years and current yearly revenue be considered?
That's a great question, Axel. We definitely need to see the most recent 3 months. They're going to weigh heaviest into the underwriting decision. Now, if there was extenuating circumstances there, we would want to know that as well, because that might be able to help us kind of tell the story a little bit. But typically, banks like to see what the most recent history is and where you're kind of at, simply because 90 days ago is completely different than today, right? That's just the nature of the day and age that we live in. So they do like to see the most recent 3 months. If you don't have those, we might be able to tell a story as to why. But typically we do need those last 3 months, especially those most recent 3 months.
All right. Wow, what a name. I Love Black Women says how much they giving you for 3 months in the biz? How much you guys giving for 3 months in the biz? That's what I Love Black Women wants to know.
I love his picture. So what I would say is, if you're somebody with just as little as 3 months in business, it's really going to be based on how much money you make. This isn't like an exact science here, but basically, if you're less than like a year in business, you're looking at anywhere between like 80 and 125% of how much you make per month, right? So if it's that $5,000 number, you're looking at like $4,000 to like $7,500. If you're somebody that makes $15,000, you're looking at like 11 or 12,000, upwards of $25,000, right? They're gonna generally give you about how much money you make per month, especially if you're under 12 months time in business. That changes if it's specific to equipment financing. But if we're talking specifically about cash for your business, that's generally what that number is going to be, um, unless there's receivables that show otherwise. Let's say you just got a really large contract, completed some work. We can leverage those receivables to get you additional funding. But as far as term loan, line of credit, working cash advance, working capital type of deal, you're looking at, like I said, 80 to 125% of what you do per month, especially up to that 1 year mark.
All right. P has kind of a personal question. I don't know if you guys want to answer it or not, but does your company make money off the loans or that you get for customers, or do you charge an upfront fee?
This is actually a fantastic question. There is no application fee for us. You're not going to get charged a fee to apply. There's no fees that you're going to get charged on the upfront for working with us. There might be a fee associated with funding, but how we actually get paid is determined by the lender that you actually determine that we're going to end up working with. And what I mean by that is we don't know which deal you're going to choose until you choose it. Right? When you do, all of the lenders pay us a little differently. Some pay us percentage of the loan that's paid through the cost of capital that you're paying on the loan. Some charge a fee on the back end, and we get a piece of the fee that they're charging. Some tell us to charge a fee after funding, and that's how we get paid. And some is a mixture of that. So it's really actually going to be determined by the product that you choose. But just to cut through all of that, we are a for-profit business. I don't want to hide behind that. We do make money in this business, and we are privately owned. I saw that question a couple times. Are we publicly or privately owned? We are privately owned. Our owner, James Webster, actually sits as the chairman of the SBFA's Broker Council. So if you're somebody that wants to get into brokering financing for businesses, according to the Small Business Finance Administration, what that regulation looks like is determined by James, the guy who founded our company.
Okay. Kelvin Birch, what about if people who did business in 2 years but no revenue, can they still be eligible for funding? Are you saying you structured your business 2 years ago, so you got your articles of incorporation, you got your SS4 form, your EIN, but you haven't actually launch your business? If is that your question? If that's your question, then the answer is no, right? You still got to have that 3 months of revenue.
Correct. The only option would be equipment there. You could have some money for some equipment there, but that's really going to be the only option.
So you'll finance someone, a startup who hasn't got started yet, for equipment, right?
Correct. Equipment to start the business.
Okay. And then they're going to PG that, right?
Correct.
Okay. Did I ask you, or did you mention what does the credit score need to look like on that type of deal for the actual individual?
If it's a startup?
Correct.
On a startup, we're definitely going to want to see at least 650 plus.
Okay. Kirk says, can I get funding for a private sale?
Private sales are super tough on the equipment finance side. Sometimes we can get them done. Weirdly, it depends on the state. I know that sounds strange, but some states have weird laws. So it's actually going to be based on that. But we can give you cash, and then you can go purchase a private sale. That happens all the time with us, where, hey, I'm going to leverage my business. I'll get cash, and I'll go that route. We've even done some seller financing situations where the seller can actually take on a note, and you as the borrower just pays the note. So, I mean, that depends on how well you know the seller, but we've even done that in the past where, like, hey, I'm going to buy a truck from a larger company. They take the note out and you make the payment. So it really can depend on a variety of different things and how you're looking to do it and who you're buying the truck from, to be honest.
Now, when you say cash, that's in form of a term loan, right?
Yeah, term loan, cash advance, or line of credit.
All right. So I want to talk about that term loan thing. What are the payment options? Are those daily debits? Because I really don't. I gotta keep it funky with you guys. I advise people against daily debits. I think that's an easy way to kill your business. That's me personally.
Yep. So what I would say back to that is if you take any of these products and don't do the right thing with it, it wouldn't matter if they put you on a biannual payment, you paid every 2 years, it would still not be great for your business.
Mhm.
What the daily debit does is it takes a monthly payment and breaks it up into 20 micro payments. And anytime we sell that type of product, because it is on the platform, we usually
Mhm.
tell the business owner to make their own monthly payment right into that checking account. Right. So if you know that your monthly payment would be $2,000, but it's $2,100 payments, well, then just
Mhm.
put $2,000 in at the beginning of the month, let that pay your payments for the month, and then do the same thing again next month. And you're making monthly payments into the payment. It's just sitting in your account and paying it off for you. So we do offer the product. As far as the payment structure goes,
Mhm.
that's going to be based a lot around affordability. So the way that
Mhm.
that works, right, is the balance that you keep in your checking account. And I don't want to, if I go too far into things here, pull me out of this, or Mark, tell me I go too far, right? But basically, the balance that you keep in your checking account is going to determine the payment structure that you receive, right? So what a lender wants to see is, can you afford three payments at any point of the month? Right. So if your monthly payment is $2,000, just using that same example, like I was just doing, you have to be able to afford a $6,000 payment at any point in the month. And if at any point you go under a $6,000 balance, you're
Mhm.
liable to not qualify for a monthly payment. And what they would then look at is either a biweekly or weekly payment, right? So if it
Mhm.
was biweekly, you'd be paying $1,000. If it was a weekly payment, you'd be paying 500, right? And then they're going to do the same thing at that. They're going to say, hey, can they afford a weekly payment? And afford a weekly payment means you can afford three of them at any point in the month. So if it is that $500 number, right, they're actually going to look at your bank balance for $1,500 about. And if at any point in the month you go under $1,500, you're now liable to not qualify for that weekly payment, right? So that's where they would actually then go and offer you that daily payment, because what they're looking at is the last 90 days of transactions and where did your bank balance end up at the end of each of those days, and could you afford a payment on any of them? Because that's really what a loan's about. You don't necessarily know when your daily, weekly, or monthly payment's going to be when applying, but that's a little bit of insider information for you guys that, like, hey, I know I could afford this type of payment, or really kind of look for that type of payment. Now, if you're somebody who does meet that criteria, but you just started in your business and you have a sub 500 credit score, I can't guarantee that you're going to go out and get a monthly payment just because you have enough cash on hand. Sometimes there's extenuating factors that will overrule that example that I gave, but I just want you guys to have a baseline of thought process as to what you would need to qualify for that type of payment structure. It's usually between like 3 and 4 payments on hand at any point throughout the month.
So basically, the riskier the deal, the more frequent you have to pay.
Absolutely. That's a 100% fact, right? If you're somebody that is brand new, right, your first loan that you take from us might be a 6 month daily payment option or a 5 month daily payment option. Now, when that's over, your next one might be a 1 year weekly option. When that's over, your next one might be a 3 year term loan monthly payment, right? That's usually what happens too, is the relationship starts to grow with the lenders, and we can utilize your positive payment history to go out there
Mhm.
and get you better terms and better payment structure.
Great. Uh, uh, I think he's asking the same question. Okay, yeah, he got that answer. He mentioned routes. Let's see. He mentioned roots. They want cash flowing businesses, not startup with no bank statements showing 50K a month. Is that true or no?
For us, no,
I'm
we don't.
assuming.
Yeah, we don't need that. I mean, if you're purchasing a specific route, they might qualify you, whether you're talking like a FedEx or UPS. I don't know exactly what it takes to purchase one of their routes, but they might have some minimum qualifications for you. But as far as ours, it's those 3 months time in business and $5,000 per month in revenue.
Okay. Michael Hawkins. On paper, I've been in business for 9 years. Started off as a DBA, registered as an LLC in November of 2021, but have no revenue in my business. I was working a 9 to 5, but looking to get a cargo van. Ideals, if any. I
I
guess
think,
he
man,
wants to know if he can get a deal for equipment for a cargo van.
So you could get a deal for equipment. It would just have to be one where, like I said, you got to be able to put the money down, because essentially, even though you've had that business around for a bit, it's not making any revenue recently. So for us, we would need to see the revenue in order to get you cash or something like that. So on that side of things, you would just be looking at equipment financing where you'd have to put like 20 to 50% down.
Uh, he said, "Can you speak more to getting the contract?" You guys know what he's talking about? Contract? Did you guys talk about a contract, or did I miss it?
I think the only time I really talked about the contract was when I was just explaining that the difference between any of the products is simply the way the contract is worded.
Mm-hmm.
In order to get to a contract, you just got to apply and say that you're going to take funding. No. I get you any contract you want.
Let me see. Let me see.
I also saw someone mention early on if they should apply with a sub 600 score. And I'm
Mm-hmm.
always going to say go ahead and apply. If you're meeting that bare minimum requirement in terms of revenue and time in business, we may not have the best option for you, but you're still going to be presented with the best that you qualify for. And then if that's not what you want right now, the beauty of our marketplace is you have the option to come back in the next 2 months, the next 4 months, every time, and you'll be able to see each segment that you come back, what you're going to be able to qualify for, how the offers improve, and then ultimately what's going to be best in your business every time.
Absolutely. And I saw Terrell followed up here, so shout out to him. Thank you for that. Exactly what I was talking about before was receivable funding, right? So when you complete a job and you bill a company, um, that's where you essentially create an asset in your business, and people will lend you money for that. So as you complete the job and you issue an invoice, we potentially can use that invoice to go get you funding. um, I see Paul saying, remember, they want 30% down. That's not necessarily the case across the board. If you're an existing business that's been around for a while, I've seen them require as little as like 5 and 10% down on some of these purchases. So really, the 30 to 50% down is on a brand new startup company that doesn't have any revenue coming in. And that's, don't even hold me to that. It could be as low as 20, but they're definitely going to want to see the liquidity that you have access to the money.
Do you have minority or veteran programs?
So we don't have anything running currently at the moment. In the past, there's been some special programs. I do know we can utilize that if we're looking the SBA route. There are some specialized programs within the SBA, and they'll approve some different types of funding throughout the SBA with that. So that is one route that does still have some of those options available. But right now, as far as like what we're offering through all the other lenders on our platform outside of the SBA, nobody's running really any promotions, to be honest. To be honest, if I'm giving you guys the straight and true information, lenders are tightening guidelines right now. They're pulling in requirements, and they're making sure that they're dotting their I's and crossing their T's. I mean, shoot, I don't know how up to date you guys are on information, but right prior to this call, I found out the government is stopped all COVID funding. So, during COVID, they offered what was called the PPP, or the Paycheck Protection Program.
Mhm.
There was a lot of fraud that went down with that. And because of that, a lot of people are getting locked up. A lot of people are having to pay a lot of money back. There's famous people that were wrapped up in it. There's influencers that are wrapped up in it. And the next hot item that came out from the government was called ERTC, or Employee Retention Tax Credit. And the government, literally like 4 or 5 hours ago, came out and said that they are putting a stop to all new ERTC requests. They are not giving out any more ERTC money. So the government is not giving out any more free money. The banks are pulling in all of their lending. All signs, if I'm being honest, are pointing towards recession. The old saying, the old definition of a recession was
Mhm.
2 consecutive quarters where GDP went down. Well, they changed the definition a few quarters back because we've been on a downward slope of GDP for the last year and a half.
Yep.
So the banks are dealing with it. The lenders are dealing with it. If you're somebody that's applying because you're growing a business, kudos to you, because you are one of the few and far between, because times are tough right now. I saw a statistic the other day that last year at this time, the average credit utilization was under 70%. Right now, it's hovering around 93% nationwide credit utilization. So, just take that into account. People are using their credit. They're not going to have as much money on hand. When you use all that credit, it's also going to lower your scores. So the quality of borrower has even gone down across the board. So there's a lot going on in the economy, and that's a big, big part of what you're, I don't want to say applying against, but exactly what you're applying against is you're battling that economy. You're battling the reality of what banks and lenders are seeing out there. And to be honest, because of some of the things we were talking about before with some of the influencers that got into this industry and were dropping some information and saying some things, there's been a lot of fraud in this industry, and lenders don't love it. So you are in one of the higher risk industries. I'm not going to sugarcoat it for you. It's important that you understand what it is, the reality of the situation is. I mean, I don't want to say they're coming after you, but they're not helping you. That's for certain. So, you got to make sure you help yourself. Stay in locked in with people like Mark, and staying locked in on this podcast. If you're somebody that's growing a business or taking advantage, make sure you're going above and beyond when you're doing that, because a lot of these things that are going on these days are working against you.
So you probably did miss it. I've been consuming a lot of information, and I've been monitoring the chat. Did you give us an average of what you're selling money for as far as interest rates? Did you give us a range right now or no?
So our typical rates act like a credit card,
Hmm.
and they're like anywhere from the mid to low to mid teens, and up into the 20s, depending on what you qualify for exactly. There are some products that creep a little bit higher depending on exactly what it is that the qualifications of a borrower is. But again, our average, I don't know, probably floats somewhere between like 18 and 22, 23%. There's also a different there's also a difference in the products. So some of them operate on that APR style, like I was talking about. Others operate on what's called a factor rate, or a set cost of capital, or simple interest rate. So, for example, a factor rate of like 30% might sound like a lot, but it doesn't compound, right? So, for example, if you borrowed $100,000, it wouldn't matter if it was on 6 months, 12 months, or 18 months. If it's a factor rate of a 30%, you're going to pay back $130,000. Now, if you're talking about 6, 12, and 18 months on an interest rate that compounds, even if it's 15% and it compounds, it's not going to be $115,000 because that rate is going to compound. So you really want to understand, how does the money actually work, and what is the cost of capital overall? And a lot of times you got to get pretty decently far in the process to really understand what that is and what that shapes up for as your business. You got to apply, you got to compare and contrast options and really understand what's available to you and how could you possibly leverage it.
I want to ask you guys a question about lines of credit, because that's the product that I've always liked, and that's the product that I kind of push people towards. What do you guys, in comparison, business line of credit versus a term loan? What would you, if you had to coach someone and they could get both, which option would you coach a person into?
It would all be based on, and just to be honest, my favorite is also the line of credit. That's just my personal preference. But what I would actually say is it's based on what they were using the money for. If they needed continuous access to funding, I would tell them to look at the line of credit. If they were somebody that they had an immediate use but didn't see any future opportunity for funding right now, I would tell them to take the term loan, simply because of the way that things work. And it also comes down to how quickly you can pay it back. So a term loan a lot of times is cheaper if you need a longer time to pay it back. A line of credit, will actually compound more the longer you keep it out. So, you may see an interest rate of like 1 to 3% per month on a line of credit. So if you are somebody that is taking a line of credit and you need to keep it out for 12 months, well, if you're on that 3% side, you're looking at 36% annually, right? So, that's expensive. Whereas the same client who applied for a 12-month term loan might only pay, 18%, 20% on a term loan. So you could save a lot of money by utilizing a term loan if it's something that you need to pay off over that longer term, versus somebody who, hey, I'm really just solving a cash flow crunch. And when these next couple invoices hit, I'm going to pay this thing off. And then I'm going to need that money again in 6 weeks because that's when I'm going to have another cash flow crunch. Like, that's a line of credit customer. So, it's really going to come down to them. But like I said, my product that I always like to point at is the line of credit, just because, like I know that that's the most flexible for a business owner. And listen, there's power and flexibility, right? So, the more options that you can have with the funding, that's certainly going to be where I'm going to put the eggs. I'm going to put my where I'm going to put my eggs and what basket I'm going to put them in.
Okay. And I don't know if you expounded on the business line of credit earlier, but business line of credit, the money, if you approve, the money is sitting there, and then you can pull from it, as much as you need or don't need, and you only pay interest on what you pull, and then when that money is replaced, whatever you approve for, it goes back into that pot, and so on and so forth, right?
Yeah, absolutely. As you pay back that principal, it becomes available to you on the line again. And you're, like you said, you're only paying interest on the percentage of the line that you use. The one thing I will say to keep in mind about a line of credit is there's usually some form of draw fee associated with a line of credit. What I mean by that, every time you draw against the line, there usually is some form of fee. So again, that's why I always say, like, let's really understand all of the options and what you're doing with the money. Because, if that draw fee is, 1% or 2% or 2.5%, whatever it ends up being, that could add up quickly if you're somebody that's going to, take small draws a lot of the time, versus somebody like, who come in and might draw once, draw the whole thing down and pay it back in just a few weeks, and draw it down and pay it back. It's really going to come down to what you're using the money for more than anything.
Okay. A few more questions here. For the contract approvals, would you look at the revenue expected to approve a business? For example, a company receives a contract for final mile or other, and based on contract, they would receive $5K plus.
So the contract doesn't work for us, right? I want to take the term contract out of there. You have to have completed the work. A contract is kind of like a purchase order. That means that you have the right to do the work. If you haven't done the work yet, we can't do anything with that. If you've completed the work and you're billing an invoice, now we can help. So if that invoice is for something that's going to show more than 5K, then potentially we could help. A lot of times on that invoice side, they do want to see a little bit larger of invoices coming in, and typically you're billing anywhere between like 50 and 100 grand per month. I know that may sound like a lot when we're talking about 5K plus, but at the end of the day, there are a lot of different options available. So even if you are coming in around that 5K a month, let's talk about it.
All right, I see that's all the questions that are here. So, if no one else has any other questions, if you guys had anything else that you wanted to say before we wrap it up,
I
guys can say your last words.
I just want to apologize to Edgar and Big Zo. Let them know that they're on the forefront of my mind. I'm going to be sprinting back to the computer to go see what's up with those, and let them know that we'll be in touch. Thank you, Mark, more than anything for having us on, man. We really appreciate it.
I appreciate you guys. Once again, guys, episode 6. I appreciate you guys for taking the time to speak with the subscribers tonight. You guys are welcome back anytime. Once again, guys, Rock Financial. The link is pinned to the top of the chat, and it's also in the description. Make sure that you guys use the link so I can follow the deal, because if you don't, you come to me with questions, I won't be able to see anything. And here comes Axel with a last minute question. Line of credit, you need both personal credit and business credit, or one or the other?
That's a great question. You don't need business credit for a line of credit. They are going to look at your personal credit score, though, and it does need to be above a 650. Axel, thank you so much for the questions, man. You are a true rock star tonight. Appreciate you.
All right, guys. Appreciate everybody that's in the chat. They're saying great information, guys. You guys are welcome anytime. Maybe I'll have you guys come back maybe around tax season or something. Maybe next year around this time, first quarter, when things are dry and people may need some working capital to get them through the well, I don't think we're going to have a peak season, but January and February is usually dead, so that's probably when people are going to need money. So I'll probably invite you guys back then if you're up for it. But other than that, another episode. I appreciate you guys. Till next time. Peace.
Thanks, Mark.
Thanks, Mark.
No problem.